Welcome to Trends with Friends at Invest with Rules. We have a big agenda in regards to the markets. There's a lot of volatility today. End of the month means a few things to us. Number one, that means that we have the billion-dollar fund manager refreshed information, that roughly trillion dollars of what on earth these huge funds were buying and selling. We will cut and clean that as quick as we can, likely over the weekend, and send that off to you and refresh our billion-dollar fund manager page, which will then refresh our watch list. And we'll send all that to you. We'll cover that next week. And then next week's video on Friday, we're also going to do a ticker submission video. So submitting whether you like us to look at an ETF or a stock that's important to you. That's fantastic. So we'll do that. And that'll be the major theme. Before we jump in, world's quickest disclosure. This is just information. It's not a direct solicitation to go buy or sell anything. Please always manage your risk, manage your rules. We're going to talk a lot about volatility, managing emotions, managing your process. We have a lot to cover that I think is going to be really valuable. But Mike, you created an interesting dashboard for today, and there's a lot on this page. So why don't you kick us off to what we are looking at on the weekly recap from Invest with Rules?
Yeah, thanks, Scott. The purpose of this, everybody, is to kind of try to put it in one place without having to hunt around for essentially how's the week gone. The past week since last Friday, since we had our last Zoom call. And so to start off on the top, we've got performance. And so we're showing this week, this month, January, which is just about wrapping up today, and trailing 12 months to show you both short term, medium term, long term, how the various parts of the market are doing. We're listing, of course, US stocks represented by the SPY. That's just slightly up this week and going to end the month, depending on how the market shakes out today, slightly up for the month, having a nice trailing 12 months. All right, so then we look at international stocks having a very decent month. Gold, obviously, having a tremendous month. Bonds that have been, no big surprise, flat. Decent, considering bonds, decent trailing 12 months. Bitcoin obviously has been getting trashed and has had a pretty, let's call it pretty bad general last year. And then we're also showing how we're doing with the trend roadmap model portfolio. And so this week we're cruising into today, having another really good week. But as you all probably know, we'll talk more about it over the next several minutes. The precious metals are definitely getting hit today. And so we're going to end up the week, depending on how things shake out today, probably down a bit. But this month, we're going to close the month out with a pretty darn decent month. And trailing 12 months, we're pretty happy with. We also show on the upper right-hand side the trend, what's going on. And you could see, actually, we had some overheats as of yesterday, but now the only overheat is international stocks. You got US stocks, gold, bonds, back at gas. And then if you go down to the bottom half, on the left-hand side, we sum up the market health right now. As of when we snapped this, which is about 45 minutes ago, the market health was a 9. We're about 99% invested. And our portfolio heat is now down to a 4.4. If all of our stops got hit, then we're down about 4.4% more than what we're already down today. And so it's actually, a day like today is not fun. We'll talk more about that. But it's actually good to see our portfolio heat kind of contracting. And that basically means the trailing stop losses and the gaps to prices to the trailing stops, they're contracting, which is not necessarily a bad thing. It's constructive as long as we hopefully don't get stopped out of positions. And then lastly, the lower right-hand side just sums up our actions for the week. We closed out XLV yesterday. We opened up Valero yesterday to take XLV's place. And we also trimmed. And I know there's a question, at least one question from Greg on trimming. We'll talk more about that. But we trimmed silver twice this week, and gold, we also trimmed it yesterday. Scott, anything I missed or anything you'd add?
Yeah, I would add a couple things. I'd love to know if in the chat, if you like this new weekly recap. I
Yeah.
think it's a really cool, clean way to see everything. The international overheat's gone. Our portfolio heat's contracting. I think there's a lot of emotion that comes on a day like this where there's a lot of euphoria that flips to fear. So that's where we want to go next. But I think the next best place, which is going to sum this up, will go into some of our rule systems. So the next segment that I want to cover is selling into extremes, our rules around that. So we have two, and all of our rules were tested. We deploy our own money. We deploy it in the newsletter as well as in our advisory practice. But the first one is when the relative strength index, so that's its price movement onto itself, is greater than 88. And so you could use higher or lower. That's what we have determined based upon our research. So I'll share with you that in a minute. And then our trailing stop loss. So every single position has risk management. Will you perfectly get out at the top and in at the bottom? That would be phenomenal. That's just not reality of life and investing. But can we get close to maybe the extremes, which lo and behold, so far was selling nicely into strength in the trend roadmap strategy? So trailing stop loss. So our stop loss is down here and the price is way up here. And the price has gone so vertical that our risk to our trailing stop is greater than 25%. And these extremes had us selling a few things this week. So I want to share with you on the live sheet that when we trade, we send this picture out when you're in the members area in regards to the live sheet. I'll just share an example of Micron since it's at the very top. So the very first one is the relative strength index on Micron is 82.5. So if it was in theory over 88, you would see us sell into strength, extremes. The next one is if the trailing stop risk became greater than 25%, you would see us sell into strength. So that is why we sold gold and silver yesterday, and then 2 days or 3 days ago now, more silver. Now, could silver and gold go up a ton more? It's possible. Could they come crashing down multiple percentage points? Or then, of course, that's part of the reality of making 200% over a very short period of time. But Mike, what would you add to selling into strength rules or any questions on that?
And we say this a lot, but I think it's worth mentioning that if your process differs from this and you use either a different point to sell into strength or you do it as a regular course, you follow like an IBD method, that's Investors Business Daily, where you sell at 20% or 24%, whatever you choose, feel free, definitely follow your process, do it consistently. But this is our process. And this added step of the 25% gap, as we back tested, it feels good. And in practice, it feels good too, where you've got such a wide gap to the trailing stop. Hey, let's go ahead and take some off the table, but still leave the full position.
Cool. I'll move on to, I want to share this. So I've talked to a bunch of clients this week. I've talked to a bunch of members as well through the newsletter, and I wanted to share some top strategies for managing market stress. And we're all guilty of this to some extent. Money is emotional. So I want to share a few highlights that I think are important. Nothing's perfect, but I would say, like back to what Mike just said, is following your process. Are you back testing your process? Is it more anecdotal? But part one is how do you manage market stress? In our opinion, again, filter this as you see fit. Revisit your plan, revisit your rules, and remind yourself of your goals. So a lot of the time, the money that you're investing or trading is money that you likely aren't going to be utilizing for a very long time. So there will be some temporary pullbacks. Obviously, it's been a great year so far, but that's par for the course of investing. It's if one wants no volatility and no risk, that is unfortunately where money markets are coming. And money markets, cash, CDs, treasuries, again, manage your process. And we're going to get possibly a new Fed chair, Warsh, and lo and behold, they're probably going to be lowering rates. So all those rates are likely going to be going lower. Potentially. You don't know, but likely. Part two, in your strategy, diversify. So have different asset classes that are non-correlated, increase liquidity in downtrends, and hedge. So we do a lot of that in our process, and we'll show you step by step how we do it in our model portfolio. So I hope that's helpful. Number three, we're all guilty of this. Limit information overload. So reduce time spent on financial news, social media. Our brains are hardwired to like say futures are down, let's go look at the metals. Let's go look at tech. How is this reacting? Oh my goodness, Microsoft just is down 12%. And it starts to eat at you. And then your brain, instead of trying to do something else, it goes and wants more. And it wants to be validated and confirmation bias. So trying to limit that is really important. Trying to practice some version of grounding techniques, whether it's breathing exercises like Wim Hof, or there's a million different ones that are really positive. Exercising is probably the best. Go out for a walk, get in the sun, just take a break, try to lower how you're feeling. And then finally, speak to a friend. I have a friend in this. A great example is we're part of this community, so we open it to questions. This year, we wanted to have a more community feel, so we can have questions and we can be a team here together in the newsletter. We always would say talk to your financial advisor as long as they mirror your belief systems, because if you're fighting uphill against their belief systems, that's not very fun. And then last, lo and behold, so thank you for being in this community with us. We do have an advisory practice. So if this is eating at you and you're like, gosh, I wish I had more free time to do other things in my life, that's why we have both services. There's never any pressure, but we care. We want you to do well. So I'm going to pause there, Mike. Any questions on some strategies for managing how we feel and our emotions?
Do you want to go ahead, dive into questions now, or are you asking about this specific topic, Scott?
Let's do a question or two if that looks important to you.
Yeah, tell you what, let's go ahead and hit. First of all, thank you for the comments. We got some comments about this weekly meeting is great, which got a couple thumbs up. Excellent. All right. So Greg asked, first question. A few days ago, you suggested trimming silver, like we talked about. Should we have also inferred trimming SIL-J and many other metal, precious metal related tickers, like the miners, etc.?
I'll go first. So here's a chart of gold. Again, this is our trading view tool that we're still testing. We're almost there. So at some point we will be leaving Google Sheets, which we're happy about. So as an example, we're just not there yet, but we will certainly try to get that to you. Hopefully, our hope is February timeframe, maybe March. So here's gold. Unfortunately, it's not fun to see today's gold, but the orange boxes are overheats, meaning RSI over 68. A red box, which is no longer today, would be that's that RSI over 88. But the question, the answer is like, which are obviously going to be feeling some heat. The miners weren't at extremes. And the miners, as long as gold and silver just don't fully implode back to 2 years ago's prices, they're going to have significantly better fundamentals moving forward. And if you think about the S&P 500, there's just Newmont Mining. So there are no other like stocks in the indexes. So you're gonna have to go to like mid cap or small cap to finally get precious metals type stocks. So anyway, long story short is it wasn't at extremes. So will these get bought up at some point? It's possible. It's probable. But Mike, what would you add to the miners versus the physicals?
It's a great question. And once again, go to the caveat. If it's your process to go ahead and trim and SIL-J fell into your process, trim. But it didn't fall into ours. Just like Scott said, SIL-J mathematically, based on our algorithm, did not give us that extreme signal. So therefore, we didn't trim it. Now, let's be honest. Did we feel like it was the human? We're all human here. And it's anybody who says that they don't have that guttural instinct to take action, I think is kidding themselves.
Yeah.
But even though we had that guttural, I can't even say it, gut
Got
reaction, there you go.
yeah.
It's your word, guttural, and I try to put it in my vocabulary, Scott. But that gut reaction, we followed the algorithm, we followed our process. And so our process was trim gold, trim silver, leave the miners alone. Now, will the miners recover? We just don't know. But we're going to follow our process. And one thing tying into the segment that Scott covered, one of the slides talked about trying to decrease the noise. You could sit here and argue, Mike and Scott, aren't you guys noise? There's a distinction here because we're giving you what the math says. And we're going to touch on stop losses because there are a couple of questions about stop losses, but we're doing it what the math says, not what our opinion says. And by noise, we're talking about there's so much opinion in this world, in this financial services world, Twitter and YouTube and the whole bit. There's so much opinion. And you get inundated by that. It creates analysis paralysis for many of us. I know I've been guilty of it plenty of times in the past. So long way of saying that that's why, Greg, we didn't trim SILJ and the other kind of precious metal related because we were following our process and the process said don't trim. Hopefully that helps. All right. Let's go. So we got a couple of other comments. Oh, okay. Jason asks, can you explain again how your TS risk is calculated? And in fact, I think there's another question a little bit further on down about this. So the way our trailing stop is calculated is we have our algorithm calculate when is this ticker likely to go into a short-term downtrend. Coast, exactly. Sorry.
Yep.
A coast or a short-term downtrend, exactly. So that's our calculation, our estimation of when that's going to happen, and that's our trailing stop point. Now, as far as the details of how that's calculated, that's still, let's call it our proprietary kind of behind the scenes kind of thing. But suffice it to say, it's a trailing stop that does trail with the ticker. So to answer another question, I think Ann asked, yes, the stop does trail along with the price in the upward direction. And however, when you've got a meteoric rise like gold, the gap is going to widen, right? Because the trailing stop algorithm is doing its thing, chugging along. But then gold says, hey, I'm going to take off here, and the gap widens. Hence why we did that 25%, let's trim, sell into extreme gap part of our process. So, Scott, what would you add?
That's a good question. No, I think there you go. So silver just went from gas to coast. That's fun. So yeah, so the answer is we're anticipating a coast is what it's trying to do.
Yep.
And when you are look at that. It's almost went so far straight up that it went almost to the left on silver. So we trimmed here and we trimmed here on this day. So again, nothing's perfect. I wish life was perfect because we're playing with uncertainty. No one knows today was the day. It could have been Monday, it could have been Tuesday of next week, but the extreme levels were there. So we took the extreme levels. And we're not just going, I think everyone's fear is that I'm going to lose all my gains. And that's just not reality, even though it probably feels like it at times, where we have a mechanism to the trailing stop will come and it will hit and it will hit coast and we will sidestep and find the next opportunity. And if there are no opportunities or our models say be careful, then we'll start building more cash.
John asked, why is the commodities market reacting to the new Fed chair as they are? Great question, Scott. This is in your wheelhouse. I've got an opinion on this, but what's yours?
I just think it was looking for any excuse at this point to pull in. Like, how independent are they? So then you could get so far into the weeds, and I'm sure this is a 20-minute segment on CNBC. But the reality is, it really going to be helpful? And the easiest thing that we do is we said, this was overheated on gold. It was overheated. And not only was it overheated, it was at extremes. So anything could have triggered this. It could have been any movement of the dollar. It could have been any headline news. It could have been today's PPI, a little bit hotter inflation number, which moved the dollar. It could have been the yen carry trade. It could have been any geopolitical risk. But I sit there and I say, if I were the treasurer, again, I'm not, of Canada or Mexico or pick any country, would I want to buy Bitcoin with our dollars? No, it's down 20 or so percent this year. Would I want to buy the dollar or US bonds? Maybe not, because everyone is slowly or quickly debasing their currency. Would I want to buy gold? Yeah. And why it's done so well for us and for most people. And there's an enormous amount of investors that don't own gold. The index owns Newmont Mining. So there's every single 60-40 pie chart in the world doesn't own any gold. No one owns silver, whether we have a solar boom or not. So I think this is just our brains search for the why, but does the why really matter when the math tells you what to do? The math said trim. The math said get in a long time ago. Would we pick up some shares today? No. I hope that's a fair answer. I think investing is emotionally a roller coaster. So we're trying to get off that roller coaster of the why and just focus on the what and the when, and then click the right buttons and move forward. But I think it's a really hard endeavor. Mike, after you.
Yeah, a couple of comments. First is that to John's question, and thanks, Scott, for giving your thoughts. And I agree with you, but who knows? Ultimately, John, there everybody's got an opinion as to what is causing this. That is it coincidental with the new Fed chair being named? Is it not? Is it related? You just don't know. Without us surveying every trader out there in the universe, so you just don't know. And anybody who says that they do know, they're giving their opinion versus following a process, just like Scott is laying out. But the other thing to mention, this kind of ties into both this discussion, but also the little segment we did on trying to manage emotion and whatnot, is everybody talks about having an edge in trading and investing. And I'm seriously convinced after doing this for many years, taking many lumps, many black eyes, that having a non-emotional process to your trading is in and of itself an edge. So if your process, for example, whatever you follow, whether it's us or your other process, if it's saying hang tight with gold, then you hang tight with gold and not succumbing to the emotion of, I got to get out. That's an edge because that lack of emotional reaction or that discipline is going to, in the long term, pay off. And I've seen it, I've experienced it myself. I'm sure many of you know exactly what I'm talking about. So we're just encouraging you to be methodical, follow your process, not get emotional. A day like this is super tough, and that's why timing this Zoom call and getting us all together is really good to talk it through. But hopefully that helps. Okay. Dennis asks, after the last government shutdown, we saw a down market. How do you feel now? Interesting question, Dennis. Scott, and this kind of almost ties into the other question about what's the market reacting to today. But what are your thoughts, Scott?
The government shutdown, I don't want to share the honest answer is no one knows, but there's never been a historical moment where the government doesn't reopen. Maybe that might happen down the road if the US dollar wasn't the kind of reserve currency. At this point, the answer is it's the market likes to call bluff. So the last time that happened, the market almost barely reacted. And historically, when that happens, if you use those people are always on social media that are like, if you look out 1 month, 3 month, 6 month, it's like it's usually an actual buying opportunity. So the short answer is I don't know if it's important for us personally. I think it's an interesting phenomenon that happens every few months, I feel like, or every few quarters. But is it worthy of me clicking buttons for our wealth based on that? I don't believe so.
Yeah. Yeah, the only thing I could add to that to answer your question, Dennis, is exactly what Scott said. And we just look at the price action tells all. And I know it's kind of cliche, and a lot of folks say it, follow the price. But it really is true. The price action really does tell the tale, whether it's on the indexes or the things in your portfolio. Let's go ahead and look at some charts. How about that, Scott?
Let's
And
do
we'll
it.
wrap up.
S&P 500 still on a gas signal. So what you're looking at this line is the 21-day exponential. I'm showing it because lots of people like to look at it. The red line is the 50-day simple. Way down here is the 200-day simple. You undercut the 21 and recovered yesterday. You undercut it and recovered again. If I were to display a discretionary chart person, I think that's your support area, although it's probably not perfectly aligned. And the reality is you're still making higher highs. This is despite how maybe you feel this is still very constructive. International market still looks really
Oh, yeah, please.
appealing.
Yeah.
It's
Yeah.
coming off of over an overheat, so it looks way better than the US market. This is a combination of developed and emerging markets. That kind of video we did last Friday was the theme of international. We actually did that exact video with a different twist last year, and lo and behold, international held up. And part of it is you look at the US dollar, which is technically up today, but it looks pretty terrible. It's on a break signal. So it's just dancing around the 200. Then I think I'll just share just things that we exited. So I don't see anything terribly wrong here, but healthcare, which we exited, we had a half position from 2025. And healthcare stocks got a little bit of the shock effect of Washington from our our Medicare prices are going to go up, and so how much? So it's on a coast, meaning short term down, long term up. Depends on your gains. We just took our profits and took off. It hasn't been the most lucrative move so far, but Valero, which the funds are accumulating, we'll do our research over the weekend to confirm that. But you're still on a gas signal. You've this is like the gap. So you're testing the gap area. So hopefully it can hold here and then start to make a kind of a climb. But the earnings were decent. The funds are there. You're on a gas signal. It wasn't on an overheat. It was the next in line that we were accumulating. So we'll manage risk if it doesn't work. But so that those are some charts I think were more timely. Any other charts, Mike, that were important?
Actually, stay on Valero because that ties into Dahlia's question. So Dahlia says, I exited VLO yesterday after an intraday loss of 4%. What are your parameters to exit this position? So really it goes back to that short-term trend. And when we see the short-term trend ending into a downtrend, going into a coast, we will go ahead and close out Valero. In fact, Scott, if you could take a look, I think we're really close to the stop loss at this point.
Yeah, VLO stop is at 178.68.
Yeah, so we're super close.
So do 178.68. So somewhere like right here.
Yep. So if Valero ends up closing the day at or below that on Monday morning, we're going to take a real hard look at it. And if it doesn't recover, we're going to ditch it and move on and close it out. And that's on to the next trade. So, Dahlia, the other thing I wanted to mention is that if you selling intraday with a 4% loss, if that's following your process, pat yourself in the back. Bravo. If you sold at 4% intraday as just a reaction to what was happening without your process, then that's something you want to probably take a look at. I'm guessing it was part of your process, and that's great. Bravo, pat yourself in the back for sure. Because not everybody on this call is going to have the same process we do, which is totally fine. And some of you will follow us closely, some of you will not. But please, whatever you do, follow your process. So, Dahlia, hopefully that answered your question. If not, certainly jump back in. All right, Gregory asks if a recommended investment has gone up a lot after a day, several days or longer, but still has a gas rating, does this mean a member should still buy it according to your back testing? Also, does Coast mean hold? So the easy one, Coast, yeah, Coast means it's probably at the trailing stop loss and to move out of it. For some of you, coast may mean hold, and that's totally cool. But for us in our process, coast means it's probably at the trailing stop. It's a kind of that warning to look at the trailing stop, and we're probably getting out of that position. So that's what coast means for us.
So can I add to that?
Yep.
So coast, it depends on your time frame. If you have enormous gains and you're a long-term investor and you can sit through bases like what I Investors Business Daily would like a cup or a sizable base, then that would be a longer term investor or trader. Again, we can't use the word recommend, but we would encourage you to maybe take some down on a break because that's when things get really nasty. And sometimes breaks don't last too long. When it comes to us and our process, we would actually be looking to sidestep. So our portfolio might look very different next week, but the coasts, if you're a long-term investor, then yeah, coast is more of a kind of coast and hang out. But if you're following our trend roadmap, likely we're going to be rotating into either other investments in uptrends or we will be adding more cash. So again, that is par for how we want to handle our drawdowns and how we feel comfortable. That's why in our advisory, we have some tax sensitive options that are different than what we're showing you here. When the answer, and I'll hit the other question, which is if it's on gas, it doesn't necessarily mean we would add it. So if for us, we look at our watch list and it says possible add, that's what we would consider. That's additional confirmation that we're looking for within our gas signal. Now, again, nothing's perfect. There's always the risk that it could go amazingly well or you'll hit your stop. Mike, anything you'd add on the coast or adding in how we operate?
The only thing I will say that you have this view of the watch list up is that there are 12 tickers in the watch list out of a possible 20. So it's telling to see that the watch list is now down about 40%. So the opportunities are less, which is telling about maybe some of what's going on with the market. All right, Gregory, hopefully we answered your question, but if not, jump on back in. Bob's got a question. I spent this week getting stopped out of my various metals. No worries. I'd been there a while, but what would you watch for to get back in? Do these even show up on Billion Dollar Fund Manager Action? RSI, maybe. Bob, great question. In fact, Scott, you want to take that or you want me to?
Yeah, Bob, totally. Yeah, well done. Number one, what would get us back in would be a gas signal that has its confirmation. So it would, in essence, show up on our watch list at the top. So it's relatively improving, relative strength improvement on a gas signal with the turn. Let's just look at a chart of XTL, which is acting wildly well today. So because of Light and a few other players. So you can see how what that looks like in comparison to what other charts we've shown have looked like. So you're near all-time highs, you're making the turn. So obviously it broke out and squatted, so that's not great, but you can see how you're still sitting right on that what was once resistance is now support. So once this market stops having a fit, I wouldn't be shocked if Light, which is on our billion dollar fund manager report, just comes up and out despite today's challenging day. The other question was
Do these even show up in the Billion Dollar Fund Manager
oh,
reports?
no.
Yeah.
And physicals, no. Stocks, yes. So we are fully running off of relative strength index and our trend roadmap for ETFs. For individual stocks, then yes, they are billion dollar fund manager stamped.
Gregory asked, let's see, and does overheat mean sell or to set and watch your stop? So I think Scott covered overheat, but you want to touch on that one more time, Scott, just to be safe?
Yeah, it would just be patient. It's run a little bit too far without you. So I think one of the mechanisms for me for doing this for a while is when I had no process and no rules in the early 2000s, I would just read something or hear something and just go buy something and then watch it fall on me. And through a lot of testing, I found that an overheat can stay overheated for a really long time. But if one is going to move a significant amount of capital, that whatever that is to you, let's take Lumentum way down here, or even go. So after the break, you had the U-turn, which means it's short term's up, long term's down. You had a little short little spat of a gas, and then it had a teeny pullback. But you'll see that you had these 1, 2, 3 day windows before all the overheats, and then you had another chance to reload before overheats, and then your overheats will eventually dissipate, and then you'll have this little, whether you want to call it a consolidation, a volatility, a contraction pattern.
Yeah.
It's on a gas, so you'd hold, Coast would say like, not yet, and you say, okay, maybe I would consider adding a little here, and then stop. That's how I think about it. And then you would be thrilled with yourself way up here, and maybe you take some down or whatever your position is, but that is the operation.
Yep. And then tying into this, Jackass, please explain gas. Gas basically is the long term and short term uptrends aligned as up. That's a gas signal.
It's yeah, so it looks like this is what we visually want to deploy our capital on. It's right here. So when we saw Lumentum, it went from a break to a nasty pullback, like in the pullback time. You had your U-turn. Gas is short term up, long term up. U-turn is short term up, the long term's not there yet. So this is where you get this confirmation, is what we're looking for. And
Yep.
our watch list is just this. That's what our watch list is.
All right, excellent. We've got, let's see, we've got 12 more minutes left here, so we'll wrap up shortly. Have a couple of more questions, I believe. Jason asks, what are some alternative ETFs for international, basically as an alternative to VEU?
Down to the watch list. So are there any international on the watch list? Because it goes rank to the watch list. So Japan would deserve one's attention. Keep moving down. China. China may fall off, so I'd maybe wait. We'll do another refresh after this call, so we'll see how that pans out. So maybe Japan, maybe China. And then I'll go back to the rank. And what the watch list is doing is only pulling the gases, and it's only pulling that additional confirmation that our algorithm's looking for. You'll see an awful lot of commodities still. There's Japan at number 29. as it loves to jump on these videos. Sorry for that. Any other comments, Mike? So you can see Japan is there, and you got to keep scrolling down,
Yeah,
scrolling down, and then eventually you'll find more.
yeah, and I'd say a direct alternative memory. Gut check my memory here, Scott. ACWX is a direct alternative, right?
But it's 100% correlated to
Yeah.
VE. If one's trying to finagle tax loss harvesting, there you can, as long as they're different underlying indexes, again, consult your CPA, you could like hypothetically sell one ETF to move to another ETF that's non-identical.
Yeah.
Again, that's a totally different subject.
And IMTM is an interesting one too. I'm not sure if you mentioned that, Scott, but that's international momentum. Interesting too.
Yeah, so I think the main thing I would say is watch list first, ETF rank second, and
Okay, let's bring this home. So hopefully, Jason, we answer your question. Greg, you wanted to raise your hand. Greg, did you want to jump in and ask a question? Are you good? Raise your hand if you do. Otherwise, yep. Okay, I think you're good. And then last question, so we can wrap up this Friday edition is when Frederick asked, when is the billion-dollar fund manager list updated? Ironically, literally, it's going to be this weekend, but it's updated once a month. So every month we update it, typically in the last couple of days of the outgoing month. So in this case, January. And then hopefully, if all goes well, waiting for you on Monday morning will be a fresh list for February of the February billion-dollar fund manager stocks. So hopefully that answers your question, Frederick.
and the ranking is done at the end of the close, but what gets added and what falls off is monthly.
Yep. Oh, yeah, yeah. That's an excellent point. In case you're talking about the ranking, that's done daily after the market closes. So sometime after 4 p.m. East Coast time, sometimes it could be as late as 8 or 9 o'clock. But bottom line is by the following morning, the rank is updated going into the next trading day. All right, excellent. We covered a lot of fantastic questions. Oh, Gregory does have his hand up. Greg, go ahead, jump in. Yep, let's let him mute you here. Yeah, go ahead, Greg.
Thank you. Thank you. Appreciate you addressing my questions. So just real life example, EWZ, I don't know if it was within the last week or in a week and a half, you put out a recommendation. It was up 2.5% that day or maybe more. Next day, like another 2.5%. Next day, maybe it was 1%. So it got out of the gate really quickly and now it's overheat. I was a little skittish when like the first day it's up 2.5%. I saw your note late. So I thought, okay, just watch it. Maybe it'll pull back a little bit. You get in. That's all personal process and preference. And so I guess you just obviously you do a person does whatever they're comfortable with and just wait for the next opportunity. Or maybe one also builds in taking your recommendations and then also looking for one's own recommendations through the watch list and like the ETF list. Would you say that's reasonable?
Yeah, that's a great question. Thanks for it. So I think I'll interpret this, I think the way you're thinking. So first part is EWZ. So we're looking at a chart of EWZ. So our world would say, hey, pay attention on the gas signal, which was on December 23rd. Most people would say cup and handle. And I'm not surprised that it does well after this. We don't want to spend all day looking at charts, and we want a computer programmed model to tell us what we want to look at. So the answer is if it's on our list, back to exactly what you said, your personal process, that yeah, we would consider certainly adding. Again, if your timing's not perfect, maybe I would think about maybe position sizing down. Again, whatever's right for you. And then the watch list, which gets updated several times a day, you'll see at the top, it will say updated time. That's where we go fishing. This is truly where we go fishing personally for our advisory, which we eat our own cooking. So this is where we go fishing. And if I was to look at it, it's pretty overall, I would say a lousy day. It doesn't mean that Monday can't be a worse day or a phenomenal recovery day. We honestly don't know. But our portfolio might look drastically different next week. And on top of drastically different next week, this is the best of the best merchandise. It's still telling you that the telecoms look fine, water looks fine, energy, Japan, shorting Bitcoin. That's fascinating. The money seems to be okay with Nvidia. So, Mike, what would you add to that?
Yeah, I think you hit it. And hopefully, Gregory, we answered your question. So if not, please jump back in.
So just real quick, so if a person doesn't want to watch a computer screen all day, they either wait till you get an email,
Yep.
or okay, if they want to take on a little more responsibility on their own, look at the watch list and say, okay, let's say Japan, if you want to get some international, obviously no guarantees that Japan's markets are closed now. So maybe they're going to react in a similar way with a lot of connection between global markets these days, or country international markets reaching around the globe. Okay, maybe that's going to be down. Maybe it'll be a good buying opportunity if the US rebounds on Monday but Japan's down or something over the weekend.
Yeah, I guess the question is, are you comfortable, which only you could probably answer, are you comfortable
Sure.
with an unknown unlimited upside with a risk of 2.9%? That's how we would look at it.
Yeah.
Okay. Sounds good. Thank you. Appreciate you
Yeah.
addressing several questions there.
This isn't easy, but we try to create a system that is a little
Sure.
bit of a roadmap. But yeah, I think that's a really good question.
Thank you to both of you.
Thank you, Gregory. All right. I think that wraps it up. Just let's double check to see if there are any hands or questions. And I think we got it. So there you go, Scott.
All right, let's wrap it up. So again, first, thank you for being a member. Enjoy your Friday. Hang on. And next week, things could look a lot different. We could pull a lot of our risk units are shrunk, to say the least. We've had a great start to the year. There's risk no matter what we do. The question is, will we manage it? And certainly that's the plan. Again, try to follow your process, follow your rules, maybe watch that kind of a segment, get out in the sun, go for a walk. Try to pull away versus get sucked into whatever. The media is an amazing magnet and they would love your attention for the rest of the day and all weekend long. Try to focus on what's important to you, your family, your friends, and we'll try to provide as much high quality research as humanly possible. But enjoy your Friday. Thank you, and we'll talk soon. I hope this helped you identify some uptrends or things coming to uptrends, but please always do your due diligence, manage your risk tolerance. This is not a direct solicitation, just things for your watch list. I hope it was helpful, and I'll see you at investwithrules.com.